Hey everybody, hopefully you're having a good day. My name's Andy, my channel's Finding Value. Today we're going to go over a bunch of different information about market conditions. We're going to look at a bunch of different commodity prices, see what they're doing. We're going to throw in a couple of ratios like the CRB to S&P 500 ratio, see how commodities are doing to the stocks. All these things are important to understand because they give us information about the current market conditions. The thesis of the channel is proposed on an expansionary phase of real estate. An expansionary phase of real estate means that the demographics are in a certain period of or point in their life where we could see a little bit higher velocity of money. We can see that the money's coming into the system through new loans against new homes being built in an expansionary phase of real estate, which is inflationary. That's what it's been in the history. In history, under those market conditions, commodities price themselves higher. There's a big repricing. The repricing happens because money flows from stocks and bonds to commodities in an increasing interest rate environment under a weakening dollar. The thing is, you have to have a little bit of time in an expansionary phase for this to start, that money to start flowing through the system and us seeing it in the inflation numbers. Are we there yet? We are very close. We're in the beginning of this. So we might still have, we'll call it a gap between all this money printing that happened and all the checks that were sent out and the expansion phase and the inflation that comes from that. And I'll show you what it looks like in the charts. So let's jump in here. Again, this is just my financial opinion. Please don't use it as advice. Here we go. So the upper left, S&P Case-Shiller U.S. National Home Price Index. It is on a tear. Home prices are going up. It's been moving at a very good pace. And this here is saying that we need to build more new homes. If you look at the last, this was the bubble here, and there's not, in history, there wasn't too many bubbles in real estate. There's only a few. But you could tell that this thing kind of had to turn over, and it didn't just go straight down. It turned over for a year or two before heading lower. We are in full-on up mode right now, and I think it's going to take a year or two for this market to turn around, if it were to turn around. That's a huge if. I don't think it's turning around. I think you're going to see the biggest increase in home prices that we've ever seen in anyone's life because of the imbalance in real estate, and we'll get into that in a little bit. But we've been moving on up. The housing inventory, it continues to go down. This is the median days on the market, which means that this is how fast inventory is turning. It hasn't turned this fast in a very long time. It means that housing is sitting in inventory for less time. We come up here. This is the housing inventory active listing count. This is your inventory that is available to buy. It is continuing to decline all the way. We've had a little bit of an uptick just recently, but it is incredibly low levels. Inventory has to go up first before home prices can stop or just slow down the acceleration of home price increases. Inventory has to go up, and it hasn't really gone up. It's been on this tear going down, which means, if I were to take a guess, home prices are going to continue higher and at a pretty fast pace because this is very low inventories and the inventory is moving faster than ever. And if it does cool off a little bit, I would say that's perfectly normal. And home prices are still going to go up, in my opinion. Moving on over to oil. Oil this past week broke through its downtrend line, and I expect to see this moving on up. Looking at oil from a big picture view, we could see a massive move if oil closes above, I'd say, if we get to $80 a barrel. So a good $5 to $10 from where we're at, we could see a massive move. There just isn't much resistance up there. Looking at the CRB to so this is a ratio, commodity to S&P 500 ratio. We've broken the downtrend line. You could see that clear as day. We've got low, higher low, higher low. We are basically making higher lows and starting a new uptrend. Looking at it zoomed in, the CRB to S&P 500, we have this pattern. We broke it to the upside. We may do a little bit of a back test, and then we're gone. And what this means is that the commodity index is outperforming the S&P 500. Commodities is where you want to be. And you can see this thing is it's basically basing out, bottoming, and turning on up. Copper is putting in a continuation pattern. We just got to break to the upside. Hopefully, if we break to the downside, I don't see how that's necessarily going to be a long-term possibility. But short-term, yeah, it could break lower. It could break higher. That's one to watch. But we're still in this pattern. It is a continuation pattern because when you enter it from the bottom side, it usually continues and moves on up, generally. This is uranium. Uranium has been on a tear recently. It has been increasing quite rapidly, and you can obviously you know this if you've been in the uranium mining stocks. They have gone 50, 60, 70% up under a very short period of time. Some of them well over 100% in a month's time frame. Now coming back over here, lumber looks like it's firming up. We've got the line coming across here. We came back and touched it, and I think what you're going to do is you're probably going to continue higher. We got to build a whole bunch of homes. A whole bunch of homes. Now, speaking of homes, this is your new privately owned housing unit starts. This is just new residential single-family homes. The real estate cycle bounces back and forth, and we've been heading higher, and we just went into an expansionary phase of real estate. If this remains elevated and continues to go up, what that means is that we're going to get more inflation. And every single commodity bull market, one started here when we went into an expansion phase. Another one started here when we went into an expansion phase. And we've got another buy signal on the commodity to S&P 500. That's that CRB to SPX ratio, which is this guy right here. That's why it's breaking to the upside. We have confluence, or the merging of information, that says, hey, look, we are heading into an expansionary phase, which basically supports, both of these graphs support each other. One is saying we're going into an expansionary phase. They're both saying that. And then they're also both saying that commodities are most likely going to increase because we're entering this type of environment. Now, iron ore's had a horrible sell-off. I don't know the reasoning why, but it is pulled back. It's a massive pullback. So that's one to watch, but huge pullback in iron ore. Gold, you can see the blue line of where we're ended this week. We've got some support here. It's kind of coming into some support. We'll see if we can bounce and rally to move higher, but we'll see. Cobalt looks like it's looking really good. It looks like we're coming up to this resistance level. We've got a low, higher low, and we're coming in, just breaking the top here with some resistance in this area. If it starts to move on up, I mean, we could see a big move in cobalt. Lithium carbonate. Lithium has been doing very well. It's been on a tear to the upside. I'm sure investments in lithium have been doing incredibly well. This is a vertical move. It's looking very good. Platinum. Now, platinum's one that I would be probably buying in this region down here. This is the last bull market consolidation period. So the bull market here was the last one. Then we had a consolidation period. Right before the consolidation period, we had this hump. We're putting in that last consolidation hump. And I would be a buyer down here. It is incredibly cheap if it comes back like it has in this $938, $900, upper 800. It's very good, and we've got a trend line break too. So that one's got my interest. Tin has been on a tear as well. Massive move up. It's going to be in all-time high land. And I think we're going to probably continue higher if we get a weaker dollar. Give it some time. Nickel looks kind of like uranium. It's got this pullback period. It came back in 2016, and it's been just kind of marching higher. We could see a big move here in nickel at any point to the upside. So that's one to watch as well. Then we've got silver. I'm going to back out here just a little bit, try to get both these in here. We've got platinum and silver. Notice that these guys have basically the same chart pattern. If you were to look really, really close. I mean, they might be delayed a little bit, but I mean, it's the same pullback period, It's coming on higher, same type of pullback. We're just pulling back right now, and I think we're going to launch at some point. I can't tell you the exact timing of it, but these two are matching each other. Just be patient with silver. Natural gas, we broke out of this pattern here. It's been moving on up. It's been on a tear recently, and sometimes they like to consolidate for a little bit before moving higher, but it's been on fire. It's doing well. And then neodymium, this is a rare earth metal. Looks like it's starting to try to pull a little bit higher here. We'll see where it goes. Usually what happens is you kind of go into this big consolidation period before moving on up. What I mean is this portion here could be this portion here. And I think we probably have to consolidate for a little bit longer before moving on up and stair-stepping higher. So that's what I've got for an update today. I kind of wanted to touch on a whole bunch of different commodities, give you guys kind of a bigger picture of a whole bunch. These are some of the ones that I usually track. From this, I get investment ideas. I think the best areas, I know this sounds weird, are actually precious metals. They're down. Nickel looks really good. That one is also down, so I'd probably look at maybe nickel investments. The investment that I play is Nova Royalty. Again, this isn't a recommendation. You guys do your own due diligence. But I like royalty companies. It's a small little royalty company. It does not have any revenue. It is highly speculative. But it's getting a bunch of royalties on development assets, and I think it will pay out very well out into the future. So I've been buying that thing up. You have to buy it when it's like this because they're getting the royalties very cheap. That's why they're going after development projects and not ones that pay out, because you pay a lot less for them. And when you're just starting up and capital is scarce, you got to go after the best value. And I think they're doing that. And their counterparties are all very large, massive, we'll call it mining companies, diversified mining companies. So their counterparties are very low risk. So I think it's a good bet. But that gives you kind of an overall picture. The CRB index to S&P 500, I think, is the most telling and most important charts here, because it's showing us that the CRB index is outperforming the S&P 500, and we just broke out of a pattern, which means we could be moving on up quite dramatically here. Oil looks fantastic. That's one that I put more investments into. I do think that's a good looking area. If you guys like this type of analysis, subscribe to the channel. Don't know what you're waiting for. Just click the subscribe button. Give me a thumbs up for the content. And thank you for listening. This is Finding Value.